and the moderator of the session was Chairman the Balagopal Ram Mohan, my fellow Managing Committee members, and other respected colleagues in profession. Today, ICAI Ernakulam branch is conducting a panel discussion on GST, covering various aspects of GST law, such as levy, registration, input tax credits, refund, assessments, and place of support. I don't need to tell anything about our resource persons. From the very beginning, since July 1st onwards, since when GST was introduced, they were the front runners in disseminating the information on GST, teaching the information on GST, educating the members and the public along with the ICAI, all the activities related to GST. So, it's a wonderful moment for all of us, because all the three giants in GST, I should say, Sir Rajashekaran and Sirjo, they are coming together in a panel discussion, ably controlled or moderated by our past chairman Balagopal Ram Mohan. This session will be very useful to those who are attending here today. I don't think I need to tell anything about GST or what we are covering here today. You know it. You're all here to raise our questions or queries and clear it as a panel or jointly and make ourselves more updated or refreshed in our knowledge on it. Friends, today I think only because of some technical reasons that we arranged this session in the morning. It's as a morning session. Usually it's our practice to conduct it on from 3 p.m. to 6 or to 5, whatever it is time. We know that the morning time for all of us, some professionals, it will be a busy time. So even though you are all at the office or at your workplace somewhere, this also gives you an opportunity for you to log in and to raise your question or interact with our panels and share our doubts or queries or to update our knowledge. Solely because of the indirect instruction from the central that we should not clash our program with the SIRC or the local branches, we arrange this as a morning session. All the other sessions or webinars which we are arranging is from afternoon session only, which is from 3 to 6 or 5 to 6 or whatever. So, kindly bear with us. Almost around 110 people, members are registered for this program. And morning time, they are gradually joining it. So that is the reason why we 10 minutes more grace time for also for beginning this program. So I hope and I'm sure that the session will be very useful to all of us. As I mentioned earlier, the resource persons today are C. Rajashekaran and C. Sirjo. It's my pleasure on behalf of Ernakulam branch to extend a hearty welcome to C.A. Soman Sir, C.A. Rajashekaran, and C.A. Sirjo to this webinar. I would also like to welcome the past chairman and the moderator of this program, C.A. Balagopal Ram Mohan, to this webinar. We also welcome all the colleagues and seniors and friends in profession and the MC members present here to this webinar. Secretary C.A. Joss, Vice Chairman C.A. Ranjit, C.A. Salim, and all others who are here to attend this seminar. This was a wonderful learning time. As usual, let me bring to you that if any member wants to raise a question, please raise it in the Q&A box. Q&A box is beside the chat box, either in the three dot icon, or it should be separate as a question mark on it. Don't mix your general comments with the questions. All the queries should be in the Q&A box and all your comments in the chat box. And if any one of you want to raise a question, if it is a lengthy question, you can raise it personally. Just mention your intention in the Q&A box. We will call you and unmute you, and the video will also be unmuted, and you can present yourself your questions and clear the doubts or queries whatever it is. So please see that whatever your queries, put in the Q&A box, not in the chat box. Again, I am telling the CP credit, I am repeatedly telling that though in all the sessions, many members are registered. In one of the sessions, nearly 200 members registered, but 150 only attended. The rest 50, I don't know why, what is the reason why they are not attending. Maybe it is because of some other emergency or otherwise, if they feel that they will get CPA credit by registering alone, it's a mistaken notion. Because we are supposed to submit the attendees report also to the CPA credit. And in some cases, they have clearly objected to members even joining late and giving CPA credits. So they are blocking those cases also, not allowing credits. So please see that registration alone will not make you eligible to get CPA credits. You have to attend the session. We have arrangements in such a way that you can join till the 1 hour from the commencement of the session without any problem. But if you are joining late, I'm afraid we will not help you, will not be able to help you, and the CPE department will also be giving, maybe may not be giving you the credits. So please see that, kindly register and attend all the sessions. Don't think that the registration alone will enable you to CPE. So early registration also, it's because we can start in time and end in time also. Please see that register in advance also. That's all I want to tell you. Wish you a wonderful learning time today. Thank you for your patient listening. Thank you. Over to CJOS for the proceedings, please.
Thank you, sir. Thank you, Chairman, Chair Varghese. Now I'm very happy and privileged to introduce our panelist and moderator for the day. All the panelists are very experienced in indirect taxation and having a very vast experience for the practice for the last so many years. We CA Rajashekharan B is a practicing chartered accountant for 14 years, and he handled income tax, VAT, excise, import, export, SEZ, foreign trade policy matters, and adjudication processes during the past 14 years of practice. And he was a coordinator of for IDT courses of ICAI at Ernakulam branch during 2012. And he was also speaker in CPE and study circle meetings of ICAI trade bodies. And he has contributed many articles to tax journals also. Then Sergio, the second panelist, he has 19 years of experience as a practicing chartered accountant. He has successfully completed certificate course on indirect taxes conducted by Indirect Taxes Committee of ICAI, New Delhi. He is a member of study group on indirect taxes Kerala, formed by Indirect Tax Committee of ICAI. Participated in the trainer program and presently faculty member of the Indirect Tax Committee of ICAI. He is having a good experience in conducting training programs, presenting papers, and conducting classes in professional seminars, and authored a few articles on professional subjects also. And CS Soman NL is having more than 25 years of experience in handling indirect tax matters such as central excise, customs, import-export, service tax, SEZ, foreign trade policy, etc. He was working with the public sector undertaking Mrs. Kochi Refinery and later Mrs. Bharat Petroleum Corporation Limited. Now he is practicing with the area of specialization in indirect taxes and GST. He was convener of the study group for goods and services tax in the state of Kerala, nominated by ICAI for the period from 2016 to 2019. And he was the faculty and trainer on GST for various stakeholders of ICAI. He is a speaker in study circle meeting of professional bodies and association. He is a faculty for indirect taxes for the CA intermediate and final courses at ICAI branches and other coaching institutions. He conducted more than 250 seminars on GST for the trade and industry and tax professionals, colleges and other students in and out of the state of Kerala. These three are the panelists for today, and moderator, as chairman said, we have none other than our past chairman, CA Balagopal Ramohan. He is a partner in Vijayendran and Balagopal Associates, engaged in audit and assurance, risk management, due diligence, transfer pricing, and international taxation. He was the assistant governor of Rotary District 3201 for 2014-15, and he is a member in Kerala Management Association as well as Cochin Chamber of Commerce. With these words, I welcome and introduce our panelist and moderator. Over to moderator CA Balagopal Ramohan for the rest of the session. Over to you, sir.
Thank you, Bose. Am I audible?
Yes. Yes.
All right. Good morning, everyone. Chairman Roy, Secretary Jose, Vice Chairman and Salim. And the timing is quite incidental, and all of us are engaged in so many things in the containment situation. And moderator is here only to contain the timing, the technical aspects, to contain within the time to help the panelists manage the time. Right? That's all. Queries are being handled by the chairman and the secretary. And we have the subject divided into 6 different strata: supply, levy, time and supply, registration, input tax, credit, places, supply and refund. And we have, I would like to, as a starting, I would like each of the panelists, starting from Rajshekharan, Sergio and Soman, to make an opening remark, maybe a minute of opening remark.
One second, Malabar sir, 1 second. Your video is blurred, not clear. Can you just adjust your video? It's blurred. It is blurred. Not clear. Not clear. No, it is far better, I think. And also, you use your the speaker. I mean, and
maybe Is it okay?
Yes.
Okay. Now I'd like to request Rajshekharan to give his opening remarks a minute. Rajshekharan?
Yeah. Good morning. Good morning, sir. Good morning, everybody. It's a pleasure in the change scenario to address, to speak with you about GST in the change scenario after the COVID. Frankly speaking, this is a new experience for at least myself, because I have had only a couple of occasions to present seminar through a virtual medium. Very frankly speaking, we feel very lonely sitting at our room without seeing the audience. So we don't get the natural energy otherwise we used to get from a physical meeting. So that is one of the constraints within which we are trying to present this seminar. So the humble request is, whenever we are presenting the topics, with the permission of the moderator, I would request all the participants to raise the questions, preferably physically, so that we can have a one-on-one, face-to-face reaction. So that will give us a kind of more energy. And about the topics chosen are very vast, and we have a very limited time of 3 hours. So I feel we should very straight away get into the technical aspects of it. That's all from my side as the.
Thank you. I like Sergio.
For me too, this is really a privilege or a pleasure to, along with my friends Rajshekaran and Soman sir and Balobal sir, to interact with you all. And my suggestion or request also is to have maximum interaction. That will be good for this being a panel discussion. What are the areas on which we have to concentrate or we have to deliberate can be decided by the participants. That is, maximum participation from or interaction from the participations, I too feel that shall be the key for success of this endeavor. Thank you, sir. Thank you to all true Baraval, sir.
Soman.
Yeah, respected chairman, senior members, and my dear colleagues. Good morning to you once again. I also take it as my pride moment to be part of this panel discussion along with my colleagues. And I also join with Rajshekaran in saying that we are feeling a loneliness rather than making ourselves available for the interaction with the members. So kindly take up by the members that you actively participate in the discussion, then only we feel that we are also part of among the audience. So nothing more, we will have an interactive session. The subjects chosen are only selective ones, and we don't mind, or we would like to go beyond that also if time permits by the moderator. It is all left with the moderator to allow the time. So I request that contemporary issues can also be taken up at this point of time. Okay, over to you, sir. Thank you. Balagopal is. Thank you.
All right. Now, after introduction, we will get into the subject straight because we are already short of time. We are touching 11. Now we have around only 2 hours, 2.5 hours. I think the subject is the whole discussion, as mentioned by the panelists, is on a participation basis, and the observations by the panelists have to be taken with a pinch of salt. That means that they are also deliberating on these issues based on their judgment. And I would request the participants to raise the queries based on this, and the queries need to be framed on that also. And straight away, I would like to request Soman to go into the aspects of time of supply.
No. Then supply.
Supply, sorry.
Yeah,
supply,
first
sorry.
aid. First aid. Yeah, first aid. Okay, sir.
And could you elaborate the scope of the term supply and taxable supply in a brief manner?
Yeah. Okay, sir. Thank you. So, good morning once again, my dear colleagues. We start with the Constitution. Just for the sake of starting, we take up Article 265. No tax shall be levied except by authority of law. So that is the basic ingredient or basic area, the cornerstone upon which we are going to build up our discussion on the subject supply and the taxable supply. We are not going into the basics of the supply. We all know, all the members are very conversant with the definition, matters, etc. What all are the living section? We just start with the living section in order to come back the supply and the taxable supply. We know the charging section, the enabling section gives us an indication as to the supplies on which tax shall be levied. Supplies, that is an event. It gives us the event, namely the supply. Now, what is a supply? Anyway, charging section says that on the supply, you have to exercise the rate of tax and arrive at the CGST or SGST, or as the case may be, the IGST. Now, the basic event is the supply. We know supply is defined so in section 7, but we are not concerned with the items there listed. The only thing is that supply, two terms are just disturbing us. Rather, we are actually finding a crossword puzzles situation like what is the supply envisaged there and what is the definition given for the taxable supply. Taxable supply and the supply per se. In the charging section, we are going to the CGST, SGST, composition levy, under reverse charge levy, under reverse charge mechanism, and under various miscellaneous provisions where we levy tax based on the supply effected. So all these places we have the supply element, which is none other than the elements described in section 7, subsection 1A, B and C, and even 1A, we will go to 1A, that is the schedule 2 items. If only we are confirmed that the particular transaction is a supply, then we will go to the schedule 2 items to describe, to identify whether that supply is a supply of goods or a supply of service. Always, everywhere we find the terminology supply. So what all are the elements of the supply? We will take up, analyze that. I'm not just going to the definitions again, as I said earlier. We'll take up the elements of the supply. What all are the elements? It should be goods or services. It should be made for a consideration. It should be made in the course or furtherance of a business. So it should be goods or services for a consideration in the course or furtherance of business. Again, should be by a taxable person. Taxable person. Person we know, but taxable person. It should also be carried out by a taxable person. And the last component, element of the supply is the supply should be a taxable supply. Then only levy will attract. It should be a taxable supply. So supply, from supply we are taking our position to the taxable supply to recognize what is meant by the taxable supply. Of course, we are given a definition also for taxable supply. If you go to section 2, it starts with that particular section starts with, if the context otherwise requires, that definition should be taken. Otherwise, unless otherwise required in the particular scenario, only we can go to the definition listed in section 2. So an advance bail is taken there. That section 2 definitions are only directional if a specific definition is not provided in a particular chapter or particular situation or so. Now, since in a number of places we are meeting the terminology taxable supply. We come across the taxable supply positions for determining the registration requirement, for charging the composition levy. So many places, anywhere, if you go to more than 50-60 places, identifiable places, we have this usage taxable supply. What is this taxable supply? Section 2, 108, taxable supply. Means supply of goods or services or both. Yeah, no issue so far. Which is leviable to tax under this act. Leviable, not chargeable, leviable to tax under this act, which is leviable to tax under this act. That is the definition given for taxable supply, which is leviable to tax under this act. Now, if we imagine, if we can take up the charging section, that is the levying section, it starts with section 9.1, that is the enabling section, charging section. That enabling section itself starts with saying that notwithstanding anything contained in subsection 2. So subsection 2 is to be taken up separately. Subsection 2, we will see what is there in subsection 2. in subsection 1 itself saying that notwithstanding anything contained in subsection 2, there shall be levied a tax called so and so at such and such rate on the value determined under section 15. Also, one specific product is excluded there, one item is excluded there from the charging session, that is none other than the alcoholic liquor for human consumption. So one of the items which we find out of the GST scenario is the item called alcoholic liquor for human consumption. So that is excluded. Coming down to the second subsection, that is 9.2. It describes about the certain petroleum products, specifically 5 petroleum products. 2 are raw material and 3 are fuel, that is products. Raw material in the sense it is crude oil and natural gas. Crude oil and natural gas. These are the 2 items which come under the crude raw material category of petroleum product items. The products generated from crude oil are petroleum, that is MS motor spirit, diesel and ATF, air turbine fuel. These are fuel items from crude oil. So 2 raw material and 5 products coming under the petroleum group and the alcoholic liquor for human consumption are the only items left out as per the charging section. As per the charging section. So taxable supply is a supply of goods or services which is leviable. As per the levying session, these are all the products, all the goods and services are leviable except the 6 items. So can we take the definition taxable supply as to cover up all the items, be it an exempted supply, is a non-taxable supply, etc. So can we take, because we find that in as we move along in subsection 6, that is the definition area itself, for the definition part of aggregated turnover, composite supply, output tax, etc., which are very frequently used by us, that is aggregated turnover is a composite supply. They all use the terminology taxable supply. Can we take it that these are all related to, or these are all taken by the definition, or is there any other situation, or is there any meaning can be assigned, or can any other meaning be assigned to that section, that taxable supply, as the common man understand? Common man understand means, as a layman's language, taxable supply means chargeable. So if you go to a shop and ask for an item, whether it is taxable or not, that fellow doesn't know whether it is, he doesn't know the definition given in the GST Act, but he says, yeah, it is taxable, otherwise it is exempted. So exempted as well as taxable are differentiated only outside the purview of GST definition, but inside the definition, it takes care of the entire thing. So if that is the situation, the aggregated turnover definition given there takes taxable supplies, exempt supplies, and even non-taxable supplies. So will it not be a contradictory statement as far as, will it not be giving us a difficult situation? Will it be placing us in a difficult situation to advise, to give a comment, to give an opinion on whether taxable supply is only for the tax chargeable items, or it takes care of the other thing? So this definition is giving us much difficulty. We will have to, in spite of so many interactions, we are not able to come to a conclusion as to what exactly the meaning. So for the sake of convenience, we can only say that if we are giving some opinion or giving some advices, take the definition as such. Otherwise, if you look at the composition scheme also, the rates fixed are half percent for the manufacturer. The third category, miscellaneous category, it is for others. That is half percent on the taxable items. What does it mean? So what is the difference between the first, that is 10(1)A and 10(1)C? The rate fixed for manufacturer is 1%, that is half percent on the taxable turnover. That is on the aggregate, that is the turnover in the state. When it comes down to the third category, miscellaneous category, it specifically mentions about the taxable items. So will it, or what will be our position? So that point needs to be looked into in almost all the sections. So that is, when we go to the ITC provisions, section 16, section 17, and value of supply, section 15, the registration. So go to registration. So registration is coming to be discussed in the next phase. Then section 24 also we come across a situation where compulsory registration is warranted. What is that compulsory registration? If you make an intrastate supply, intrastate taxable supply, so can it be taken as a taxable, liable to tax, or chargeable to tax, or leviable to tax item? We are in a difficult situation. I'm not giving any solution for that, but only thing we have to discuss on that. We have to take a curious, that is, we have to take a clean decision on what to be followed in that scenario. That is all about the taxable supply. Then coming down to the other items, so since the moderators wants me to just give an overview, the other items covered there are the Schedule 1 items and the Schedule 3 items. Schedule 1 and Schedule 3 are covered there in supply. Schedule 1 is nothing but consideration without consideration. That is, there is no consideration. In 4 cases, there will be those items, those cases will be treated as a supply, even if there is no consideration. That is, disposal of an item on which input tax credit has been taken, even if it is without consideration, that is taxable supply, that will be treated as a supply. Then between related persons, that is also very important, between related persons, even if there is no consideration. Then comes supply of goods between principal and agent, and the other item, last item, probably it may be import of an item from our own firms outside the taxable territory. Schedule 3 items are actually listed items which are not coming under the purview of the goods, definition of goods or services, because it is treated neither as goods nor as services. 2 specific items have come as that is an amendment. That is, apart from the other 6 items, we all know what all are those 6 items. Then that is the supply between employer and employee. Because of the positive time, I am not listing out all the items. Court fees, etc. Then duties performed by the members of parliament, funeral, burial, cremation, etc. Then land and completed building. Then actionable claims other than lottery. Those things are common items. Coming down to the other items, a supply of goods from a non-taxable territory to another non-taxable territory without the goods being entering into India, without importing into, without entering in India, the transaction take place. So far, based on the place of supply provisions, one of these items was leviable to tax, but now it has been taken out from the purview of goods or services, the other goods. So it is an item, transaction taking place outside. So it is not chargeable in India. Then supply of warehoused goods before home clearance. Goods come to the customs area, bill of entry is not filed, not taken out. Within that customs area, if a sale takes place, that is also treated as outside the purview of GST. Then one more, last one is the high sea sales. So high sea sales, similarly, the goods are not coming to the as a home into the homeland, but it is taking place, transaction take place outside. So this is all about an overview of the supply items. Over and above that, 2 or 3 items that should be treated as supply. We are giving material on job work basis. Job worker, if the job worker is not returning the material on time as specified there in the provisions, then that will be treated as a supply. Another thing is that when the material is, that is the sale on approval basis, when the material is sold out or taken out, delivered out for sale, and if the material is not effecting into a supply within 6 months, that original supply will also be treated as a supply. Then other 1 or 2 occasions are also there where, that is, when a business is getting closed or business registration is getting cancelled, the stock therein will be treated as a supply automatically. So these are some of the items which are coming as an addition to the normal definition. This is all about the supply peripherals, that is the supply definition and the specific terms with regard to supply and the taxable supply. We will have to take care of the taxable supply definition. We have to come to a conclusion. I invite the suggestions of the members also to look into this particular definition, and that's all about the basics. I think I have covered that small area. Paucity of time, I am stopping it there. back to the moderator, Sri Balagopal sir. Thank you.
You can use some more time if you want to explain a little more. 5 minutes more. 5 minutes more.
Okay, that's okay. We will have that discussion subsequently. That's what. Okay, we will take up the comments from suggestions from the audience. That is the participant. That is more valuable for us. Okay,
now,
sir. Right, sir.
Now, thank you, sir. Now we'll go to Sergio.
Yes.
So on time of supply.
Okay. So actually, the time of supply is an extension of time of supply is dealt in section 12(1)(13) of the CGST Act, and it is actually an extension of section 9. How means in section 9, as Swami sir has said, the levy is fixed when there is a supply. When there is a supply, GST shall be charged. That is on section 9. And now, according to section 7, the definition of supply, you can see an interesting thing there. Even an agreement to supply is supply. If you look into the definition of supply, we could see that supply includes all forms of supply of goods or services such as sale, barter, transfer, barter, exchange, license, lease, rental, and disposal made or agreed to be made for a consideration in the course of terms of business. That is what we could see in section 7 definition of supply. It means that made or agreed to be made. So even when there is an agreement for supply, supply is over. And once supply is over, according to section 9, on every supply there shall be a tax shall be levied. And now, is it mean that when there is an agreement to sell is entered between the two persons, a supply is there? Yes, a supply is there. You have to pay tax on that then? No. Why? Time of supply has not arisen. So that is the importance of time of supply. When the liability to pay tax arises, is determined not by section 9 but by section 12(1)(13), the provisions of time of supply. So the time of supply importance is that much. Whether the tax is to be paid on a particular transaction shall be determined by the time of supply. And as far as the time of supply is concerned, whether in the case of goods or in the case of services, there are two different provisions are there. Section 12 deals with the time of supply in the case of goods, and section 13 deals with the time of supply in the case of services. And time of supply in the case of any change in rate is dealt under section 14. It is different. Now, whether it is in the case of goods or whether in the case of service, a very relevant factor is the time within which, or the time within which invoice is to be raised, or the date of raising of invoice is a relevant factor in the determination of time of supply. For example, in the case of goods, time of supply arises at the time of raising of invoice, or at the time by which the last date by which the invoice is to be raised, whichever comes earlier. The payment provision is made ineffective. Originally in the act there is the date of receipt of payment also was there, but that is made ineffective by a subsequent notification named notification number 66/2017, so that the tax on advances in the case of goods is not mandatory, not to make mandatory. So the date by which the invoice is to be issued is a very relevant factor as well as the time of supply is concerned. So what is the time limit within which invoices is to be raised? In the case of goods, generally we can say that it is before or at the time of delivery of goods, generally. So in the case of goods, you cannot defer or you cannot delay the issue of invoice after the delivery of goods. At the time of delivery of goods or even before, any time before the delivery of goods, you can raise the invoice. So once you raise the invoice, the time of supply also arises, because the time of supply is date of invoice or the last date by which invoice is to be raised in the normal course of the supply of goods. A little bit different provision is there as far as in the case of reverse charge. In the case of reverse charge of goods, the time limit is then we have to look into the definition. We have to look in from the aspect of the recipient of goods. Whereas in the case of supply of goods, we are seeing it from the angle of the supplier, saying that the date on which you raise the invoice or the date by which within which you have to raise the invoice, whichever is earlier. Whereas in the case of the RCM, reverse charge mechanism, tax is liable, then we change the perspective from the supplier aspect to the recipient aspect. And the date by which the payment is service, the date of rendering of service, at the time of rendering of the service, and you can delay it. You can delay it up to 30 days. Within a period of 30 days after the rendering of service, also you are permitted to issue the invoice. Now the time of supply as far as the services is concerned, the time of supply is the date on which the invoices are issued, if it is issued within the time limit, or the date on which services are rendered if the invoices is not issued within the time limit, or the date of or the date of receipt of payment, whichever is earlier. The three things, whichever is earlier. Now, the implication is that in the case of service, by way in which it is structured in the time of supply, even if you receive the amount before issuing the invoice, that is, you are getting the advance amount, the time of supply arises, and because of that you have to pay GST at the time of receipt of the advance amount. And now, an interesting factor, an interesting thing here is that the due date, the time of supply arises on if the invoices are raised within the time limit, the date of raising of invoice, and if it is not raised within 30 days, that is within the permitted time limit of 30 days, then the time of supply will roll back, will come back to the date of rendering of service. For example, first of a particular month first of a particular month M1, you render the service. Then if you raise the invoice within 30th of the or the next first of the next month, if you raise assume that you are raising the invoice on 31st or 30th of the month, then the time of supply arises on 30th only. But assume that you fail to raise invoice within 30 days, you raise the invoice on the 10th of next month only, then the time of supply will come back to the date on which you render the service, provided you do not receive any advance amount. So the raising of invoice within the time limit, whether you raise the invoice within the time limit or not, has an impact on the time of supply in the case of this services. Again, a little different provisions are there regarding the time of supply of in the case of reverse charge of services in the case of reverse charge. It is not the time of supply arises not on the date of receipt of service. Time of supply will arise only at the time of payment. So assume that a service is received on reverse charge basis. For example, a legal charge is received during the month of March of 2019-20. In March 2020, you receive certain services on reverse charge basis. You are not making any payment during that year. In that case, the time of supply will not arise during the year 1920. You do not have any liability to pay tax during the year 1920. Even though you received the invoice, even though you received the service, even though you received the invoice from the person, you did not make the payment during that year. So your time of supply will arise only at the time of payment. That will arise only in the next year. So this is a very, very important factor. Sometimes we overlook this. We assume that the year in which the invoices are received or the year in which the services are received is the time of supply and we have the liability to pay tax. It is not there. It will arise only at the time of payment only. And assume that you are not making the payment even after a long time. You can extend the time of limit, time of supply to that, thereby deferring them or by delaying the payment. No, there is a limit. Within a period of 60 days, if you are not making the payment within a period of 60 days of the date of receipt of invoice, then the time which elapses within the 60 days, the next day you have the liability to pay tax, the time of supply arises. So altogether,
May I just intervene? Yeah, this is again regarding the type of supply of one of the reverse charge items. This is a rate. This is an emerging controversy. It seems. One of our colleagues, chartered accountants in Trivandrum, has told me that the department has issued shockers notice against the company for not paying tax on reverse charge basis with respect to a transaction where the director of the company has given personal guarantee for the loan taken by the company from the banks. Okay. And the loan is running into crore. The company has taken loan from the bank. Understand. The director, obviously, it's a private limited company. Bankers will ask for all sorts of guarantee, including the personal guarantee from director. Okay. Now, this is something which all of us have probably missed out. We have never looked at the angle of this transaction, this ramification of the transaction. This is a
very important subject because now the director and the company are related persons. So in this case, the guarantee given by the director, though there is no consideration paid, these two people are related persons. The company and the director are related person. Even if there is no consideration, there can be supply. So whether there is a supply or not depends on the as Aman sir was indicating. Schedule 1 transaction, between the related party persons. Even if there is no consideration supply may arise. So if so. This being a supply between the director and the company, it comes under reverse charge also. The liability to pay tax is not on the director but on the company. And in that case again, we have to determine what is the time of supply. This is a situation where there is no consideration and no payment is there, and we have to go back into the residual section. The residual section of time of supply services. In the residual section of time of supply, where it cannot be determined on the basis of section 13(3), the residual section says that where it is not possible to determine the time of supply under provisions of 2, 3, 4, etc., where a periodical return has to be filed, the date on which the return is to be filed, or in any other case, where it is not possible to determine the time of supply as above, time of supply shall be the date of entry in the books of accounts of the recipient of supply. So this is a situation where there is no payment is there, because between the two persons, related persons, no consideration is there. So when we will determine the time of supply, then the time of supply to be determined on the basis of section 13(3), where the residual section under section 13(3), where it says it is not possible to determine the time of supply on the basis of payment, then the date on which the entry is entered in the books of account shall be the date of the time of supply. So when it is entered in the books, the guarantee is entered in the books of accounts, the time of supply will arise. And if there is no entry in the books of accounts, that is another question then. See, this is an activity where there is no transaction, where there is no consideration, and in the normal financial accounting, we normally do not tender this transaction because as there is no monetary value, no consideration between the guarantee is given by the director only. So, though it is not entered in our books of accounts, in our cash book or in our ledger, I think books of accounts has a larger perspective. The records that are available with the company which indicates that a personal guarantee is given by the company may be considered as the date of entry in the books of accounts. Rajshekaran, what is your opinion on that?
Yeah, as you said, that is one way to look at it. And when you go to 31.3, the section relating to the invoice, which speaks about invoicing the continuous supply of services. This is a kind of continuous supply of services, right?
Okay.
So, if the event can be determined, if the time of supply can be determined on the basis of an event or those conditions are not satisfied.
But one problem there is that to treat it as continuous supply is that though it is for a period of more than 3 months, so in order to be continuous supply, there should be consecutive periodical payment provision should be there.
Or statement.
Or statement of account.
Yeah.
All these will not be available in this case.
Okay.
So there is some kind of limitation in treating it as continuous supply of services.
So that director case, can I add one small? In all these scenario, that is specifically when we are talking about the services provided by a director, we all know the services of the whole-time directors only are coming in the category as service from an employee. Whole-time directors are employees. So employee cases are not covered in this RCM situation. In other cases only it is. So we all know the advanced rulings, etc. So taking or keeping those apart. Let us see the intention of such services should also be looked into. What is the kind of service that director provides, that he is providing or he is attending meetings, the other kind of directors, that is a nominated directors. And giving guarantee for the company is also one of the activities he is required to do. That is a nominated director. So what Rajshekaran sir has said is the show cause notice will not be in the correct perspective, because department has taken it as a service provided by the director to the company, just like attending a meeting. So giving guarantee for a loan taken by the company or any commission he gets from the company for in some transactions or something like that, then a sitting fee he gets. Or he means the director which is not a whole-time director. All these should be facilities availed by the company or the considerations received by the company, by the director from the company. So will it not be an item coming under the reverse charge mechanism? Or will the department is fair enough, or will the department has a reason to give a show cause notice? I think it has been given in the correct perspective, because the intent of that service, that it's not only limited to the sitting fees received by the director from the company, whatever he does to the company in the capacity as a director. What do you say, sir?
The key factor here is, I feel, the key factor here is whether the particular activity comes under the is provided by the director to the company as an employee or not. The normal activities that the director does as part of his employment, as his employment contract with the company, the salary and other things, salary given for the normal activities as an employee can no way be considered as a supply from another kind of supply. So only those activities which cannot be treated as his normal activities as employee alone. Things other than the normal activities of employee can alone be brought to tax under reverse charge basis. So,
Correct, sir.
this personal guarantee given by other non-all-time directors, or the personal guarantee given by the directors to the company, I have doubts whether it can be considered as a activity of an employee to the employer. It is to be looked more detailed, and we have to look into the contract between the director and the employer more specifically to determine whether the reverse charge is applicable or not.
No, I think
The point that is the point. One second. That is the point. First of all, we demarcate into whole-time directors and nominated directors, external directors. So whatever done by the whole-time directors never come under this category. That is reverse charge mechanism. It is not under applicable because that is part of their duty.
Salary. Part
of their salary and or otherwise they have to do that activity for the company. We are talking about the other. I think that show cause notice has come from the department in respect of the service provided by an external director probably. If it is an employee director, we are not discussing on that point. If it is an external director, then he normally what he gets from the company for attending the meeting is a sitting fee. Over and above that, if he is providing a guarantee, that is in the capacity as a director, not in his personal capacity. Nobody will give any personal guarantee to a company. So in the capacity as a director and external director, just like that any secretary, that is in the case of government companies, the central government secretaries may be the directors in the company. So that secretary in the capacity as a director, if he gives a guarantee to a bank for getting a loan for the company, then naturally, just like attending a meeting, sitting fee he also gets a commission for that, or a guarantee commission or guarantee fee, just like that. That will be coming, that maybe, that is my view, that since it is a service provided by the director to the company, and that too in the capacity as an external director, reverse charge mechanism will be applicable. That is one thing. Then they just like that any commission he receives, guarantee commission or any other consideration he gets from the company over and above the sitting fees, it is not in his personal capacity. And we also know that if he has some personal professional qualification and he does that activity in his professional capacity as a separate person, not as a director, then it will be a different issue. So three things are there: whole-time directors, that means employee directors; others are external directors, and in that external directors category also, if they are giving out of their professional expertise. For example, in some hospitals, the director may be a doctor. So doctor giving a surgery in the hospital, it's in the part of, he may not be an employee of that company and that hospital, then that will be treated separately. So this guarantee, if the director has given in the capacity as a director, then probably there is a positive chance. Anyway, we will have to further deliberate, or we will have to invite the suggestions of the audience also, that is our participants also. Just like that.
And Ramakuti sir has made a comment in the chat saying that a personal guarantee is usually given to bank or financial institution directly by director, and not guarantee not given to company is the case I have seen. And definitely it is like that only. The guarantee is given to the bank or financial institution only, but still it is my reading on that is that still it is a supply to, or we have to look into whether it is a supply to or not to the company, not to the bank. The guarantee is given for the company, guarantee is given to the bank for the company, and if so, there is a supply, the supply is to the company only. Company only.
Can we get to the next point, Sudhyo?
Yes. I think we can go to we can conclude the time of supply aspect here. Sir, we can conclude the time of supply aspect here. If nothing more is there, then we can go. Otherwise, too much time we are taking on this.
Yeah.
Move to Rajshekhar now.
We will go for registration aspects on the main agenda. Let me invite Rajshekhar.
First, I will try to very briefly touch upon the big picture, of the macro view regarding the registration aspect. Basically, if you look at it and if you summarize it, there are basically two types of registration. One is a mandatory registration, means under the relevant provisions, the persons are obviously required to mandatorily go for registration. And on the other side, there are voluntary registrations. Like even though you are not really required to take the registrations by virtue of the taxation GST provisions, you are opting to go for registrations. So these are the two broad categories. And if you look at the compulsory registration aspects, we all know it is covered by two sections, which are section 22 and section 24. Section 22 speaks about mandatory registration requirement situations like when a business is carried by a particular registered person is transferred to a new person. The new person has to take the registration irrespective of the turnover or irrespective of any other element. That is a mandatory registration. Second is the amalgamation, demerger, and like transactions are happening in case of companies, the transfer is liable to go for registration. Then there are certain situations covered under section 24, like persons making interstate supply, they have to go for registration mandatorily. But for services, there is an exemption notification which says that up to 20 lakhs you don't have to go for registration. The section says any person making interstate supply without looking at the threshold has to go for registration. Then there are the instances of casual taxable persons and persons required to pay tax under reverse charge mechanism. Here also there is no requirement for a threshold to achieve. Then non-resident taxable persons required to deduct tax under section 51. Basically, the government entities are basically covered under this. Then persons supplying on behalf of other registered persons, such as agents or those kinds of persons by whatever name they are known, they have to take compulsory registration. Then input service distributor, if you have a multiple registrations and if you are availing certain common services at one place, then you have to have a proper mechanism to distribute these credits to your different registrations. The only enabling arrangement wherein you can do that is through an input service distributor. So that is also optional, but once you want to go for that, you have to take the registration without looking at the threshold. Then persons supplying through e-com operators, database, information database and access retrieval service providers. These are the persons who are required to compulsorily go for registration. So this is the overall view, but the important thing is registration is the first step by which you get in touch with the department, and it gives you certain privileges as well as certain compliance liabilities. Yeah, moderator. This is the big picture regarding the registration.
You need to delve into certain specific aspects like on e-commerce or.
Yeah, that's a very valid point. I will briefly touch upon e-commerce and agriculture.
Yeah, because those are the in things now.
Yeah. Just before that, one particular aspect which has a kind of created a lack of clarity is regarding the threshold limit for certain types of transactions. We all know the provisions first started with the 20 lakhs mandatory limit, both for services as well as for goods. And then we know that there has been an amendment in section 22, wherein it has been provided that where a particular person is only supplying goods, not services, he is only supplying goods, the registration threshold is enhanced to 40 lakhs. One of the exceptions given regarding the condition that he should not provide any services. he can, along with the supply of goods, he can also get interest from deposits. Interest from deposits, we all know, is an exempt service, but for the purpose of determining the aggregate turnover, exempt turnover is also reckoned. So he can supply 40 lakhs of goods, and he can also receive some interest by way of income by way of interest from deposit. Still, even though the turnover crosses the 40 lakhs limit, by virtue of adding the interest to the sales component, he need not take the registration. This is what the provision says. But if you look at the provision very carefully, the condition is that for the provision to become effective, a particular state has to request to this council, GST council, to enable that provision, to make that provision effective in the case of that particular state. But curiously, no state has made such a request to the council, meaning thereby that the provision introduced in section 22 is not effectively in place. But there is a separate provision called section 23, which gives the power to the central government to notify to notify categories of persons who are not liable to go for registration. Now the government has utilized its power under that provision, section 23(2), and has notified notification 10/2019, where it has raised the limit of 20 lakhs in case of only supply of only goods from 20 lakhs to 40 lakhs. But curiously, in the notification, there is no mention about excluding the interest. So, in a case where there is a supply of goods of 30 lakhs and there is an interest received by the person of at least even 1 rupee, he cannot go for the enhanced threshold, meaning thereby that his threshold will go back to 20 lakhs only. So there is a dichotomy between what is stated in section 22 and the notification issued under 22(3) by virtue of notification 10. So that is one point which I wanted to highlight, because it's very likely that we would miss out the specifics of this distinction. That's one point, moderator, I wanted to distinguish. Then the second thing is, there are some emerging issues, very interesting emerging issues on e-commerce, especially after the outbreak of the pandemic. We all know the resident welfare associations, especially the community in the urban centers, urban areas. During the pandemic, they had created WhatsApp groups where there were people who were producers of agro products, and there were also consumers. So what we used to do was, a person who produces an agricultural produce, he will tell that I have such and such goods with me. I have produced this. Anybody wants this? So once we come to know of this, the interested person may directly contact the producer. But the identification, the linking of the producer and the linking of the buyer, that takes place through the WhatsApp group, which is an electronic medium. Now the question is this an e-commerce, electronic commerce? And then if it is an electronic commerce, there are two ramifications. First, the electronic commerce operator has to go for registration. Secondly, the person supplying through the electronic commerce operator also has to go for registration. This is one issue that is likely to become controversial probably in future. So, looking very in-depth or slightly more detailed into the issue, we want to just see what is the definition of e-commerce. The e-commerce, electronic commerce, is defined as the supply of goods or services, including digital products over digital or electronic network. Now the point is the person producing the agricultural produce supplying his product through the WhatsApp platform? Obviously, my answer is it's not, because what the WhatsApp platform only facilitates is to link the buyer and seller. The supplier produce is directly happening between, once that identification is happening, then the buyer directly goes to the seller and purchases from him directly. The supply is not happening through the electronic WhatsApp medium. So my humble view is it's not an e-commerce transaction, and therefore it's not the WhatsApp medium is not an electronic commerce operator. And then one more interesting aspect is again relating to agriculture, very coincidentally. When we were interacting with people, mostly chartered accountants from Kottayam, Palgad, and even Malappuram districts, many of them have also got rubber plantations. Now, in their case, the very interesting question is: are they required to pay tax on the rubber sheets that they sell? Because as a chartered accountant, they are registered, but are they required to pay tax on the rubber sheets that they produce? Here also, we have looked into we have tried to get a conclusive answer on the issue, but very unfortunately, if you look at the provisions, there is a room for at least two interpretations. If you look at the definition of agriculturalist, it says something like a person who produces article through its own labor, so and so. It means a person who cultivates land personally for the purpose of agriculture. And to cultivate personally means to carry on any agricultural operations on one account by own labor, one's own labor of one's family, or labor through the supervision of yourself. So this is agricultural activity. Of an agriculturist, the section says you are, to the extent of you are an agriculturist, you are not liable for registration. What is the meaning of that specific terminology? It is something which creates confusion. There is one school of thought that in the case of the specific case of chartered accountants mentioned, he is only considered as a registered for the purpose of chartered accountant service, and he will not be regarded as a registered person for the agricultural service, agricultural product supply. The other school of thought is once you get registered, you have to pay tax on every product that is not exempted. So which means once you are registered as a chartered accountant, and then since rubber is a taxable commodity, you have to pay tax on it. So this is also something which has created a kind of confusion. And since these are the early days of GST, we have to wait for some more clarity to emerge on this issue. These are the couple of points which I wanted to highlight.
And I am looking forward to more interaction from the audience. And on this engaging in the delivery of services in other states, especially in the context of a casual taxable person concept, we're carrying out work by chartered accountants in other states or other states. Can you elaborate on that point, Rasiran?
Yeah, absolutely.
Sir, 1 second. Before going into that area, can we have a deliberation on the e-com operator service provider you just mentioned here, no? That e-com operation through WhatsApp media. It was in the last month or last month. There was so many advertisements saying that the pineapple, that agriculturist of pineapple, no, the product pineapple from Toduvuda and all places, they lost heavily because it was about to take the pineapple that the COVID broke out there. Not that the lockdown went there. So if we are selling, so any association through this media, that is WhatsApp group or something like that, electronic media, they are facilitating the sale of this pineapple to the needy, that is the customers. Can we take it that these people they are doing a e-com operator, and should they take a registration? So I would invite your attention on the points in the compulsory registration section, that is section 24. It says that a TDS operator, that is electronic commerce operator, who is So taking all these items together, the state, one state to another state, are they required to take registration? Because the specific terminology used there is that persons making any interstate taxable supply. There also we have that first issue, that is taxable supply definition issue, that is there. These are some of the or two questions which normally asked by the common people. So whether we should take registration as an e-com operator in the case of supply of goods which are exempted, and the interstate manner. But how do you view that point? First of all, that e-com operator case, should it be registered?
Can I raise a question?
Yes, please.
One thing is, are we selling the product through this platform, or are we providing information on this product as far as vegetables are concerned?
They are facilitating only. They are not selling through the media.
Facilitating the sales. They are
That's
not
all.
facilitating the sales.
They are
And the
simply
WhatsApp group, especially as you mentioned, the WhatsApp group on pineapples,
Yeah.
it was only the distress which was focused.
Yeah.
And not the aspect of so much quantum available. Who can you buy it through? Does it come under the definition of e-commerce?
I don't think so. As you very rightly observed, the clinging point here is the very essential question of whether they are selling through the platform. The answer obviously is no. The platform is only helping the buyer to find out a seller. At best, if the WhatsApp medium is getting any commission from the seller or buyer, then that commission may get taxable. That is a different point. But the question of making the sales over the WhatsApp platform is the answer obviously is no. So therefore, with respect to that transaction, there is no e-commerce transaction. That's the first answer to the question. Secondly, regarding the supply of vegetables in the states, likewise there is a notification and issued under section 23(2) for central sales tax, which says that where you are engaged only in providing exempt services, you need not go for registration. Even if you have crossed the mandate, even if you are making interstate supply, squarely applicable to interstate transactions also. This has been notified under IGST Act also. So the answer to that question also would be a no. As long as the products supplied are exempt. Vegetable is an exempt supply normally.
Correct.
Yeah.
Yes.
And now, can we go for that my question on that casual taxable person?
Yes, please.
Yeah, it is regarding the taxability. I mean, the irony is the more we learn about GST, the more ignorant we become in the due course is the first observation I want to give on it. Because initially I was completely confident that, especially in the case of an auditor, you are based out of Cochin and you have a client in Delhi where you are providing audit service to the client in Delhi. But for the provision of service, you require a 30-day stay in Delhi, where you move your resources, both technical as well as human resources, to Delhi and ask them to work from Delhi and complete and get back after doing the audit. My firm understanding was and is this is not a casual tax per person supply. But the same kind of analogy when it is applied to certain other kinds of transactions like event management or not even related to immovable property, like certain other kinds of transactions. Some experts are saying that the supply is actually made from the other state, which means there you are a casual taxable person. So there is a kind of slight confusion or lack of clarity in the whole issue also. But my view is, unless it is specifically, these services are not specifically related to immovable property. Immovable property, obviously, you are supplying only from your base state and there is no requirement for a casual taxable registration. And one exception is works contract service. Works contract service where you are providing it at a state which is outside your normal state of registration, where you require a permanent kind of, not temporary kind of resources in terms of human and technical aspects then it can be logically or it can be practically thought that there is a place of business or there is a fixed establishment there, and therefore you are providing service from there and it's a casual taxable person. Or you can also go for a full-fledged registration. Except in those types of very specific kinds of transactions, I don't think casual taxable person or this concept of providing the supply from the other states fairly applicable in the case of most of the services. That is the high level, best level of understanding that I have. I know that the answer is not very complete.
Also about this, now we are waiting for more interaction from the audience. Now, can you say something about this ISD registrations? And many cases we observe that ISD registration is not taken out the way it is to be taken out. And please.
Yeah, that is a very valid observation. ISD is basically input service distributor, where the facility becomes useful or mandatory when you have multiple registrations. And you have a head office or you have a common office where certain types of services or billing for certain types of services are completely, entirely received at the common office. Like for example, you have registrations in 12 states. Your head office is located in Kerala. You have, obviously you have a statutory audit. You are engaging professional services like auditors. They raise the entire bill on the head office. Second case may be the head office will be built in its entirety by a software provider. Software is installed and used in all the other registrations located in different states for different registrations. So in this case, can the head office take all the credits? Obviously, if you look at it, the answer would be no. In this situation, the law has provided us a facility where the credit that is getting accumulated at a common point can be distributed or apportioned between your different locations based on a formula. There is a specific provision to determine that formula. But this facility or the awareness about this facility, again, this is something which I have observed practically. In our practical situations, this requirement for an ISD in actual situations where such a kind of facility is required to be available, that is not taken by many of the registered persons. We will have registered offices in multiple states. We will be receiving at least some common services in one place, and we will be taking the entire credit in the states without proportionately distributing it to the other states. So this might create a problem in future when the department starts to make the detailed scrutiny of the transactions of the registered person.
We will wait for more interactions. And any advantages on the suspension of registration? Is there any advantages which accrue from that? The act of suspension of registration.
Yeah, suspension. Yeah, that is again a relatively new concept which was brought into the act after the initial implementation. It means you have an option to cancel your registration if you, under many kind of situations, like if your turnover has gone down below the threshold, or if you are ceasing to conduct your business, or if the proprietor passes away, or if the business is transferred to any other entity. There are situations, and also the situation of suo motu cancellation of registration by the officer under certain situations. Because if you are not filing returns for 6 months or 9 months, then depending upon whether you are a composite person or a composition person or a normal person, your registration can be cancelled by the authority. So in these cases, when you apply for cancellation of registration, there is a series of process through which the authority has to undergo, as well as we also have to undergo. Like he will inspect the information furnished, he will ask for certain payments to be made, or once only he necessarily goes through all those provisions, the officer will grant you the cancellation. And this will take a little bit time. I mean, at least 50 to 60 days. This will take. The cancellation process will take on an average. So during this time, the registration, the officer, upon your request, can suspend your registration, and it has certain advantages also from a compliance point of view. Once the auditor suspends the registration till he decides on your cancellation application, you don't have to file any returns, or you don't have to do the substantial compliance under the Act. So that is a reprieve or a relief given to you by that process. So this is again something which is a later introduction into the Act.
All right. Again, here also we need interactions. And also a specific thing which came up, that is at the time of registration of an applicant, what are there is certain cases which the department will look into, like suspicion about certain cancellations or certain things which are certain registrations which are existing related, and they were trying to evade or plan certain things based on the new registration which is being applied. Can you elaborate on that point?
Yeah, that is also one later developments in this when it is practically when the law is developing practically. When, as I mentioned earlier, there is a provision for the officer to suo motu cancel the registration if you are violating certain provisions of the Act, and especially like you have not filed the return, you have not paid the tax, you have not furnished the bank details, you have supplied the goods without invoicing, you have given false invoices without supply. Those kinds of situations are giving powers to the officer to suo motu cancel the registration. And in most of the cases, what has happened is, especially the contractors who deal with the government, who has provided service to the government, I at least know a couple of cases where the outstanding from the government is at least to the tune of 3-4 crores for a small time contractor. And it has been pending for at least 1 or 2 years. So because of that, they have not been able to pay the taxes to the government, pay the taxes under GST, and they were not able to file the returns also. In some of those cases, the registering authority has cancelled the registration. Officer has cancelled the registration using the powers of suo motu, even under suo motu provisions. So now it's a double whammy for a registrant like that. In some of the cases, and when the officer cancels a registration like that, there is an option given in the law to revoke the cancellation, which says you can apply for the revocation of cancellation within 30 days of the date of cancellation, provided you make good your non-compliances. In the case of non-payment of tax and non-filing of return, you pay the tax, file the return, and make good those deficiencies and come for revocation, then the officer will revoke. But in the case of lack of funds, when you don't have funds in your hands, how can you pay the tax is one of the questions that weighs down the minds of at least some of the taxpayers whose registrations have been cancelled. What some of this smartly did was, they applied for a new registration. Rather than going for revocation, they went to the new registration room. Some of them got through because the department was not aware of the situation. Later, they came to know about this, and now more specific circular is issued by the department to detect these kinds of non-compliances or the smart play by the businessmen. They have very categorically given directions to the officers, field operations to look into the PAN Aadhaar based details of the applicant and deny the registration if they already have a registration individually or they are partners in a firm whose registration has been cancelled previously. So this is one safeguard of late has come into the procedural aspects of the law.
Thank you, Rajshekharan, for the time being. And we will wait for more interactions to come in through the chairman and secretary. And let me request Soman to go into the aspects of input tax credit, which is our topic, and especially start with the aspect of whether input tax is a vested right.
Sir, I think one or two questions are also there from the reverse charge mechanism items. So that and the composite supply, which I have. Yeah, I will touch upon that and we'll move on. Is it?
No, we will take it in the end.
Okay, right. Okay.
I need to manage the time also.
Okay, that is the that input tax credit. We will just we will move on to the input tax credit. Could you just make out what was that question like?
Is whether ITC is a vested right?
Right. Most probably we will be ending up with the disputes. Okay. Is it a vested right or not? You are actually putting me in trouble. There are two. I start with the statement that there are two views on that. All my senior people, that is all my senior colleagues, and who have been practicing in central excise earlier and service taxes, they find that SENVAT credit was a right. SENVAT credit is a right. And so many decisions also have come in that line. After that, I am not touching upon that. It is a right. Coming to our GST scenario, the enabling sections we all know. That is some sound are coming now. Okay. All right. The enabling section is section 16. Specifically, section 16, subsection 1. That section gives us a right to avail the input tax credit. Are you able to hear me?
Yeah.
Okay. So that particular section, that is section 16(1), we all know that every person is entitled to take the credit. When I say entitled, every person shall. That is the terminology used there. Every registered person. So many other mandatory requirements. That is, every registered person shall. Shall means compulsorily. Then what is next? Subject to the conditions and restrictions specified therein. So that shall, that is that enabling provision itself is pointing out to the procedure, prescribed manner. In the manner, prescribed in the manner means there are some procedures. So Act itself says that we'll have to comply with the certain procedures. Where are the procedures like? In the manner specified in section 49. Section 49 is nothing but the utilization of the input tax credit and the payment also. Very specifically, section 49, subsection 5 is the utilization of input tax credit. And I also want to add something more on that. 49.5 has been modified with, amended with the 49A. Then thereafter 49B. Finally, we are now in Rule 88A. So there is a lot of confusion between these four provisions. 49.5, it has 5 or 6 subclauses. And 49A says that ITC shall be completely exhausted for taking input tax credit on the other elements, that is the CGST and SGST. And when some suggestions went against that, some queries raised against that utilization, then again the law has come up with the 49B. 49B said that irrespective of whatever said earlier, notwithstanding anything contained elsewhere, 49B is applicable. What is in there in 49B? It said that you have to avail the input tax credit with respect to the procedure specified by the government. Now that procedure is prescribed in Rule 88A. I will come to that a little bit later. I only said that there is a procedure prescribed. And the third element is that he is entitled to take the credit. Entitled. There are so many usages. Eligibility, entitlement, then he can take, that is, his eligibility is there, entitlement says, then avail is there. So many terminologies we are using in all these sections, 16, 17, and 18. Taking all these together, what is entitlement? Entitlement is a right. So categorically it said that he is entitled to take the input tax credit. Again, on what we will have to take the credit? Credit of input charged, not paid, charged. Credit of input charged, input tax charged. So input tax has been charged. The usage is very purposely made. That is what I understand. That input tax charged on the supply to the recipient by somebody else. It is not that he can take input tax credit by paying the tax. Though the recipient is, if had it been something like, instead of that usage input tax charged, had it been that the tax paid by the recipient, the meaning would have been different. So whatever tax he had paid to the supplier, that particular recipient is entitled to avail the input tax credit. But it is not that way it is defined in the enabling section. So the enabling section very clearly says that input tax charged on the supply of goods or services made to the recipient by the supplier, that amount is eligible for input tax credit. It's not says eligible, it says entitled. So the first reading of that enabling section is that it is an entitlement. So the answer which I would like to say that, is it an entitlement? It's a vested right. Yes, it is a vested right. But in that enabling section itself, it is pointing out to fulfilling so many parameters, prescribed procedures. So in the manner prescribed in section 49, he is entitled to take credit of the input tax credit, and that also the material should be used or intended to be used, very liberally given. Your intention is sufficient. You need not put to use, as was there in our Senvat scenario cases. It should be put to, the usage was, it should be put to use. There is no put to use now. The intention is very clear. That is, if you are keeping the material with you, so long as it is with you in your stock or as capital goods, you are entitled to take the credit. Only thing is that you should not dispose it off. So, and this amount will be credited to the electronic credit ledger. From that electronic credit ledger only, we are going to utilize that. So coming to that particular answer, whether it is a vested right, yes, it is a vested right, subject to observing the conditions. What all are the conditions? Subsection 2 also gives us the conditions to be fulfilled, subsection 2. So it says that notwithstanding anything contained. Subsection 2 starts with the non-obstantial clause that notwithstanding anything contained in this section, that is the entire section itself. Section 16, there are 4 subsections. Notwithstanding all those subsections, this subsection will prevail over all. So what that subsection says, we have to observe 4 conditions in order to avail the input tax credit. What all are those 4 conditions? Section 16 to 4 conditions A, B, C, D. A means we should have received the invoice, so it should be available. That tax invoice must be available. Tax invoice, very clearly, tax invoice having all the parameters required for treating as a tax invoice. Rule 46 also, we have to ensure we should have a tax invoice. Then we should have received the material. What is the concept of receipt? We should have received the material. There, received is taken for granted that the particular person is deemed to have received the material, even if he is that the material intended to him is unloaded at the job worker's premises on the direction of the person. There also he is deemed to have received the material. Anyway, the recipient should have received the material. Second condition. Third conditions, people will disagree with me, and we have had a number of occasions where we have confronted each other on that aspect. That is nothing but the supplier should have paid the tax. Does not say he should have filed the return. The supplier should have paid the tax to the government. So for paying tax to the government, we should file the return. So that is implied. And that too, there are so many other dimensions of that payment of tax to the government and filing the return. So return filing doesn't mean that payment is made. Return, when I say GSTR1, that is also not a return, but that is treated as a return by some people and says that I have filed the return. But so long as we are not filing 3B and making the payment, we are not paying the tax to the government. So third condition is important. The supplier should have paid the tax to the government. And fourth condition is we ourselves, in order to enable him to avail the input tax credit, the person himself should have filed the return under section 39. What is return under section 39? It is 3B for the time being. So 3B is also considered as a return of late. Earlier it was 3, but now it is 3B. So if these four conditions are satisfied, the person gets that eligibility. That is, he gets that entitlement. So vested right, again subject to entitlement in the meeting the conditions. And that too, that particular section also has certain proviso. That proviso says that you can avail that input tax credit the moment you satisfy the four conditions specified in section subsection that is in 16.2. Again, if the payment is not made to the supplier within 180 days, that is also crucial. 180 days, within 180 days, if the payment is not made to the supplier, then he loses his eligibility to take the credit. That means he has to reverse the credit as specified in rule number 37. Rule number 37. So that is also there. Second is, if the material are received in lots, we should take the credit only upon receipt of the entire lot. That is the full receipt of the material. So these conditions mandatorily are to be followed by the person for enabling him to take the input tax credit. And I also mentioned in this context, what will be the fate of the particular proviso, that is payment within 180 days during this period, that is pandemic. Some of the that is extension notifications we have got, that is if anything falls to any action to be made, to be done, falls due on a period between March 20th and August 31st will be moved on to or moved off to, deferred to 31st August. Probably certain items were mentioned there. But will this be one of the items covered in that notification? I feel it is not specifically covered there. So any person whose reversal of the input tax credit under section rule 37 by not giving the supplier the required payment value as well as the tax, that will get affected unless we get a clarification to that. That shall be a point, or that is a point to be noted by our members, whether the payment shall be affected, the date of payment falls due during this period. Will it be considered as deferred also as per notification 35 or so? So that point we'll have to take care. Only thing what I want to say is that the payment also should have been made within the prescribed time. So conditions again, payment should have been made to the supplier within the allowed time. Then we should not have taken a depreciation benefit of this tax element while capitalizing. Of late, I have heard so many people saying that they have received notices from the department. They looked at the asset register and they also found that asset that is capitalized. But without looking into the details of the asset capitalization, department said that, or department has issued as SMT, that is notices that you have capitalized the asset, so you are not eligible for availing the input tax credit on that matter, on that capital goods. So there we should ensure whether we have capitalized it with the ITC, with the element of input tax credit, or without the input tax credit. That we should ensure, that is capitalization figures we need to look into. And this may also happen in the case of banking companies. Banking companies are required to take only 50% of the credit. If they choose so, there is an option, banking company. So most of the banks would have taken 50% of that input tax credit into the input tax credit account, electronic credit ledger, and the balance amount they would have charged off to P&L account, which is as a cost. There also, the banks had received notices saying that you have only charged it off to the P&L account, so you are not supposed to take, or 50% disregarding for not recognizing that 50%, the exact, on seeing that an exact amount is there in the P&L account or capitalized figure, or the other 50,000 as input tax credit, there is a confusion on arriving at what is the subject matter of dispute. So notices have also received on that. That aspect will ensure that 50% maybe the amount may be same amount, but we have to ensure that that also shall be correctly availed. These are the three conditions. These are the three as per section 60 enabling provisions mentioned in the Act for availing the input tax credit. So coming to the conclusion on the specific question, whether input tax credit is a vested right or not, I would say it is a vested right, but it is subject to the observations of the conditions. Moreover, people will also ask that about the subsection 4. Section 16(4) prescribes a due date for availing the input tax credit. How long we can avail an input tax? That is also an encroachment into the right of the vested right of the people, vested right of the citizen, eligible person, taxpayer. He can avail input tax credit up to a certain point of time. That is, if he has availed that input tax credit during a financial year, he has purchased the or you procured the material during a financial year, his last date for availing the input tax credit pertaining to that purchase is, you all know, section 16 subsection 4 is the return filing due date of September following the financial year. Return filing due date of September for the month of September, return filing due date for the month of September, which follows the financial year. So return filing due date is October 20th, or the annual return filing date, whichever is earlier. Can that restriction be put in there? Because it is going against the enabling provision. Enabling provision does not prescribe any due date there. It only said that you can avail the input tax credit subject to observance of these conditions. So there is also another discussion going on in the field regarding the that is the restriction given in section 16(4). All said and done, what I would like to say that if the amount involved is substantial, we have every right to avail that input tax credit provided section 16(2) conditions are followed. Section 16(2), even if you are crossing the that is the limited period, that is the mandatory due date. So vested interest, vested right per se, that particular section, it is supported with so many case laws also. In earlier scenario, Supreme Court itself has said that there are the statutory media, the government or the statute is entitled to prescribe certain limitations, certain conditions. They can prescribe certain conditions for the smooth functioning of the availment of input tax credit. Otherwise, it will be pulled on or it will be taken to the that is periods. It will be very cumbersome. So many, one or two cases are Osram Surya Private Limited versus Commission of Centralized. It was a centralized decision by the Supreme Court. Then ALD automotive cases. Then the Jairam and Company versus Commission. Supreme Court also said that the government has got every right to prescribe conditions. So what I would like to say in this particular context is that since the conditions are prescribed, if a taxpayer is following, obeying, availing that input tax credit by that following that provisions, it is a right in itself. Otherwise, just for purchasing the material and paying the amount without taking or without following the provisions contained, the manner, the prescribed manners contained therein, he is not following that provisions, he cannot at a later point of time claim that he is entitled to avail the input tax credit, because enabling section itself says that we have to take that credit into the electronic credit ledger. So that is a mandatory thing to be followed. If we follow all these conditions which are prescribed, in enabling section 1, subsection 1, section 16, subsection 1, then we are entitled to avail that credit. That is what my humble submission on that. So certain other letters, that is the usages, eligibility, entitlement, allowed, available, availed, claim, etc. These are very frequently used there. Each has its own meaning. Each terminology has its own meaning. Follow those provisions and use that input types the way we are allowed to take. So this is all about that first portion, that is the whether your answer to the question is whether it's a vested right or not. Yes, it is a right. It's a vested right if you are observing the conditions prescribed. Okay, sir. That's all on that point.
Can you make your comments on this 2A, reflection on 2A?
Yeah, that is also one of the items.
2A, because
Yeah.
lot of discussions happen on, it is reflected, the return is filed by the supplier. It is not reflected. You have the original bill, but it is not reflected. Whether the person filed, you have already mentioned about 3B and not filing 3B and filing of GSTR 1.
Yes,
Now
yes.
also clear on what is what's GSTR 2A.
2A, yeah. That is GSTR 2A, basically the first reaction is that it is not a return at all. When the supplier files GSTR 1, the details will come and join the 2A of GSTR 2A of the recipient. There are so many occasions where genuine transactions missed to get a place in the GSTR 2A because of so many reasons. The supplier would not have filed or mentioned the GST number of the recipient correctly. Then it would have been inadvertently grouped under unregistered category. So many other people participants or members are aware. So the cardinal question is, are we supposed to take the balance reflected in GSTR 2A only? I am disagreeing with that because of the enabling provision I mentioned earlier. Just because there is a provision that there is a rule 36 sub-rule 4, we are all aware that rule 36 sub-rule 4 has said that all the inputs, if the taxpayer wants to avail, shall find a place in 2A. If it is not available in 2A, he is not entitled to avail the full credit, subject to a balance of a cushion of 10%. So 10%. For example, if 10,000 rupees is the actual invoice value or the tax value available with me, I have hard copies of that invoices. Only 8,000 has appeared. ITC of rupees 8,000 has appeared in 2A. I can first of all take the entire 8,000 because it has already appeared in 2A. Rule 36 sub-rule again says that the balance amount of rupees 2,000 of input tax credit I cannot avail, even though I have the hard copy of my invoices with me. I have fulfilled all the conditions specified in subsection 2. Then how much I can avail out of that 2,000 balance? I can avail 10% of eligible credit available. So I can, for the time being, I presume that the 8,000 amount available in the 2A is a eligible credit. It is not having any ineligible item. So eligible credit, whatever appearing on the 2A, 10% of that amount, that is 8,000, 10%, 800 rupees. So out of this 2,000, I can avail only 800 also. So that means in nutshell, whatever there in 2A, 110% of 2A, simply 8,800. And the balance 1,200, I cannot avail for the time being. I have to wait for that invoices to appear in 2A. That is the prescription, or that is the compulsion or the amendment given from the last October itself. And it has come into picture. Originally it was 20%. Now I am also touching upon that. There is a deferment also, that in order to take care of the pandemic situation right now, we have received an extension notification saying that each month you need not consider this 10% cases. You can continue availing the input tax credit as is there is condition, as is available in the calculation the 10% calculation can be taken on a cumulative basis up to the month of August. That means when you are filing the September month return, in the September month return, take care of all these aspects from April to September. Or up to August, we can take whatever we want, provided we have that invoice with us. We need not look into two-way. And the two-way calculation shall be made in the month of September. We are reaching that September month and we are to follow that also. So this is two-way. What I would say is two-way is only a reflection of the invoices uploaded by the supplier. When we go to filing the annual return GSTR number 9, too much importance was given on the two-way also. And is table number 6, 7 and 8 were therefore inputized in the annual return. Table number 8 was specifically for this reconciliation. Whatever amount available or we have availed through 3B, that is at the time when we filed the monthly return, inputized credit has been availed, which was finding a place in the 3B. We have availed that. This was tallied with or compared with, reconciled with the balances appearing two-way, which is automatically populated in the table number 8 of annual return. Always we found that most of the people found it difficult to tally that, and we were having so many reconciliation issues there. And the government came up with a press release saying that for the sake of filing the annual return, not much importance need be given to tallying the table number 8, because they have at one point of time relaxed the provisions and somehow wanted to see that, ensure that people filed the annual return. Now it is the time when we are getting lot of shock notices consider saying that your two-way and 3B is mismatching. So what I have to suggest on this occasion is two-way and 3B should be matching in the correct scenario. Had it been done properly by the supplier as well as the recipient. On the recipient side 3B and on the supplier side GSTR 1. These two parameters, supplier as well as the recipient, would have made mistakes in filing 3B and 2A. What we have to ensure is comply with the provisions contained in section 16(2). Are we having or are we having the invoices? We have received the material. Have we paid the tax to the government? That means the supplier has paid the tax to the government by our giving the amount to the supplier, and we have also filed the 3B. Then we can, as a matter of right, we can take it forward and challenge if the amount is material. I would also add that if the amount is material, because all the people may not be worth going for litigation. So it is a cash ITC. What we say is that it is equivalent to cash. So loss of that ITC is detrimental to the business also. It will affect the bottom line. So we have to ensure that all the conditions prescribed in section 16(2), no matter whether it reconciles with the two-way. Maximum I can tell you is that, or we can, at this point of time, practically what we can do is that you have also asked me a question whether our 3B and the two-way reconciliation is due to the non-availability of an invoice in the two-way. We have filed it correctly. We have that invoice with us. What we can do is that in order to fill the gap, we can check with the supplier. Anyway, I also urge our members to ensure reconciliation of these items. We ourselves, not for the sake of replying to the show cause notice, but to ensure, to understand what has actually gone wrong. In that situation, while we go to reconcile these two-way and the 3B balances, we find that all these aspects are satisfied, but because of any inadvertent action on the part of the supplier, it would not have appeared in the GSTR two-way. Check the particular supplier, get a letter from the supplier that he has paid the tax in such and such 3B, such and such 3B. With that, if we are attaching that letter and we are proceeding further, we will get justice in the long run. I would not say in the short run. Short run say the commissioner appeal level probably may not be able to get that, because specifically it is given in the act. They are supposed to obey the circulars and the internal decisions. So at commission level itself, up to that level, we may not be able to get justice, but beyond that level, when it goes to tribunal and the High Court, etc., it cannot be denied. So that is all about that reconciliation part.
Okay, Saman, it is
Yes.
due to constraint of time.
Yes,
Just a passing brief, very quick take on that ITC blocked on works contract under 17.5C and D. Just a
yes,
quick,
yes.
just a quick
Yes, sir.
because we are running short of time.
Yeah, have I got 3 minutes?
Yeah, 3 minutes exactly.
Okay, so right, 3 minutes. Okay, so works contract. We all know 17.5H is the one of the main items, that is goods lost, stolen, destroyed, etc. I'm not talking about that. 17.5C and D related to works contract services. So the works contract services availed by a person, that is the owner of the person, the owner of that works contract, that is the immovable property. So 2-3 things are there. The works contractor is entitled to avail the input tax credit, no bar at all. And the subcontractor is also eligible to avail the input tax credit. The owner is entitled to avail the input tax credit on plant and machinery, no problem. All other immovable property constructions which are coming in the form of works contract is denied. Input tax credit is denied in the contract. So section 15, so 17, subsection 5, clause C and D, both the parties. That is, even if the owner buys the material on his own, he is giving only labor contract, he is not giving a works contract, there also this restriction applies. Now I am taking the definition from the section 2119, works contract. Works contract means construction of a that it means a contract for building, verb contract for building. Building means making, building, construction, fabrication, completion, erection, installation, fitting out, improvement, modification, repair, maintenance, renovation, alteration, or commissioning of an immovable property. That means 14 elements are there, 14. Construction, repair, maintenance, etc. That is the definition. Works contract means it is a contract for carrying out these 14 activities. And it should be for an immovable property. With that definition, if I go to 17.5C and D, I find that construction only is restricted. Construction of an immovable property. Now, construction also includes renovation, alteration, repairs. Okay, that part also I can accept. Out of that 14, 3 more are joining with the construction. What about prefabrication? What about other aspects, fitting out, installation, erections? These are not figuring there in the restrictive clause, block credit clause. That is why I have raised a point in one of the meetings also, that can we go for challenging that position, that the restriction 17.5 is only with regard to the construction and the allied activities on that, but it is not restricted to the entire definition of works contract. That is only I wanted to highlight. There also, I take the my suggestion is, if it is worth challenging, because I know that ordinarily business are not affordable for meeting the cost of litigation. So if it's a fortune company like multi companies, then they can think of, because they are also engaging in a huge amount of project work also. So the companies which are engaged in project work and they are getting this immovable property constructed through works contract, they can afford to going for a litigation and get back crores and crores of rupees in that aspect. That is a legal point. That's all I wanted to tell you. But there is one more decision of the Supreme Court in the case of Indian Oil Company itself. That was altogether a different footing, whether it is an immovable property or not. The huge tank for 1 acre or through 2 acres width of that is area occupying tank ages. That is that particular decision was whether that tank is an immovable property or not. That should be distinguished with this aspect. We can always set a demarcation difference between these two aspects. That's all on that point.
Okay, I think due to paucity of time, we will straight away go to Sergio. Sergio, let me please cover this place of supply aspects.
Yes.
Importance. Okay. And I think place of supply, you can passing mention importance and specifically go for this place of supply provisions regarding particular provision and immobile properties. Please go ahead.
Okay, okay, sir. We know the place of supply has a lot of importance because we know the basic feature of GST that it is a destination based tax. We all know the basic feature of GST that it is a destination based tax is implemented, that feature is implemented through the place of supply features, place of supply provisions. So there are different rules for goods and services. More than that, in the case of goods, in import and export, if it is an import, the place of supply is in India. If it is an export of goods, the place of supply is outside India. That is very, very clear. What is import and export is also very clear as far as the goods is concerned. If the goods are taken from India, it is export to an outside India. To outside India, it is export. And if goods are brought into India, then it is import. So that is very clear. As far as the goods are concerned, other than the import and export, that is the transactions within the country, the place of supply provisions we can see in section 10, wherein it says that if there is the movement of goods is there as part of the supply, then where the movement terminates for supply to the recipient, that is the place of supply. And where there is no movement, then where the goods are at the time of delivery, that is at the time at which it is being made available to the other person, at that time where the goods is situated, that is the place of supply. So if the goods are remaining in a particular place and as part of the supply, there is no movement to the goods, then where the goods are kept, that shall be the place of supply. And in cases where there is another type of transaction where the goods are supplied, say A from A from Kerala buys goods from B of say Bangalore and instruct B to supply the goods directly to C at say Chennai. In that case, the goods shall move directly from Bangalore to Chennai, but B in Bangalore will raise a invoice to A in Kochi. And it is in that type of situations, it shall be presumed that it shall be deemed that the goods are received by A in Kochi. Though physically the goods are not received, it shall be assumed that are received in Kochi and the place of supply shall be in Kochi. The place of supply shall be in Kochi. And then from Kochi, we will raise another bill to C. For a single C in Chennai, another bill. So the single transaction triggering two supplies in this case. So those physical goods are not moved to the state of Kerala. The place of supply in this, the first leg, the place of supply shall be in Kerala. And the second leg, no doubt that the goods are received in Chennai and are moved to Chennai, and the movement terminates at Chennai, and so the second leg supply, the place of supply is in Chennai. No doubt regarding that. This is the main aspect as far as the goods is concerned. And further, if the installation is also, the supply involves installation, the place where the goods are installed shall be the place of supply. And then regarding the place of supply of services, we have two provisions, section 12 and section 30. Section 12 deals with the situation where both the recipient as well as the supplier are within the same state. Sorry, within the country, not the same state, within the country, the taxable territory. Both the supplier as well as the recipient. And 13 speaks about the situation where the supplier or the recipient is located outside India. These are the two situations. The provisions are slightly different in certain cases in these two scenarios. Now, when we say the recipient, we should understand what is the meaning of the recipient. It's also very, very relevant, because a recipient means is defined as the person who is liable to pay consideration if consideration is payable with respect to a particular supply. If consideration is there, recipient means the person who is liable to pay consideration. And it is not the person who received the service or received the goods, but the person who is liable to pay the consideration. And it is not even the person who is paying the consideration. That is also, specifically it is the person legally who is liable to pay the consideration, that is the recipient. That is why if I enter into an agreement with the head office at Mumbai, of a company head office in Mumbai, do certain activity in the certain type of a service in the, say, audit service, probably audit service or some internal audit or something, they're in the Cochin office. If I am entering into agreement with the head office, then the recipient, the person who is liable to pay the consideration is the head office. And even if the payment is released by the branch office in Kochi, they cannot be considered as the recipient. As far as my supply is concerned, the recipient is in Mumbai and I have to raise an IGST bill. So that is the importance of, that is understanding the meaning of recipient as far as this GST is concerned, the place of supply as well as the is concerned. And place of supply is the main tool. The intention of place of supply is to implement the system of destination-based tax. I already told you. And it also determines whether a particular transaction is an interstate supply or an intrastate supply. The location of the supplier and the place of supply are in different states or in different union territories or in one state and in another union territory, etc. Then it is an interstate supply. So we need not look into the location of the supplier, and it is not the location of the supplier and the location of the recipient, but it is the location of the supplier and place of supply. That is the two things which are to be understood. And again, section 7 is the one which speaks about what is the meaning of interstate supply. 8 speaks about intrastate supply, and section 7 of the IGST Act speaks about the interstate supply. So if the location of the supplier and the place of supply are in different states, we know it is in the interstate supply. And one specific situation, we know in the case, the place of supply in the case of immovable property, services directly related to immovable property, as well as in the case of rent and lodging and accommodation, rent, in all those cases, we know the place of supply is the location of the immovable property under section 12. Now take a special situation where a company in the SEZ area, takes the service or take the accommodation service of a hotel located in a particular state, say in Kerala, in Cochin. Outside SEZ, there is a hotel which provides accommodation service to the SEZ unit, the officers of SEZ unit. Now, what type of an invoice we have to issue? An IGST bill or CGST SGST bill. That is, whether it is an intrastate supply or interstate supply. Section 7 very specifically provides that if any supply to or by an SEZ unit can always be in the interstate supply only. So any supply to or by an SEZ unit or an SEZ developer is an interstate supply only. So a hotel in Cochin providing service to an SEZ unit, a unit in SEZ area shall be an IGST bill only. It cannot be CGST SGST bill. So there was at first there was a wrong decision by AIR, Advanced Authority ruling was there, but later on through a clarification issued by the department, it has been cleared that section 7 is the more direct section, and so we have to in that situation any supply to or by an SEZ unit can always be an interstate supply only. And in the case of immovable property, one more thing, we know normally if the supplier as well as the recipient is in India, then section 12 is the relevant section. But assume that the immovable property is located outside India. Supplier is in India, recipient is in India, but the immovable property is situated outside India. In that case, the place of supply shall be the location of the recipient, and not the location of the immovable property. So, so it shall be taxable here in India. Now assume that in this situation, even if the place of supply is outside India, shall it be taxable in India? This is not a particular service wherein location of the supplier is in India, location of the recipient is in India, but place of supply is outside India. What shall be the situation? Is it an export of service? It cannot be an export of service, because export of service, there are three conditions to be satisfied. One, the location of the supplier should be in India. Two, the location of the recipient of service should locate outside in India. It is 5 conditions to be satisfied in the case of export of service. That is, one, the location of the supplier in India, location of the recipient outside India, place of supply outside India, and the fourth one, the payment should be received in foreign currency, convertible foreign exchange, and lastly, it should not be the establishment outside India should not be an establishment, a distinct establishment of the same person in India. It should not be. All the 5 conditions are satisfied, then only the export of service, something can be treated as export of service. So, in a particular situation, even if the place of supply is outside India and the location of the supplier and recipient are in India, assume that situation. Is it an export of service? No, it is not an export of service. Then is it taxable in India? Place of supply is outside India. Then can it be taxable in India? Definitely it is taxable in India. There is no exemption provided. Even if it is export, it is taxable. We know. Even if all the 5 conditions of export are complied with, it is taxable. And there shall be no tax payable only in a situation when we have an LUT. And it is taxable, but we can claim refund. It is taxable, but we can claim refund. And if there is LUT, we need not pay tax and then go for a refund. So, simply because the place of supply is outside India does not mean that it is not taxable. It can still be taxable. And the general provision of place of supply is that the location of the recipient shall be the place of supply. If the specific, we know section 12 and 13, where section 12.2 speaks about a situation where it is not covered in the provision, the particular supply is not covered from subsection 3 to 14. If it is not covered from subsection 3 to 14, then the provision under section 12.2 shall be applicable. Similarly, section 13 says that in case where the supplier or the recipient, their location is outside India, one of them or both of at least one of the location is outside India, section 13 is applicable. Even then, the general provision says that the place of supply is the location of the recipient. And in section 12, if it is a registered person, always the location of the registered person. Even otherwise, it shall be the location of the recipient. And where a situation is there, where the address is not available, where it is not, as in the case of section 13, it is not, the location of the recipient is not available, then the location of the supplier shall be the place of supply. So, the place of supply is, the general provisions are there, and now we have the specific provisions from 3 to 14 in case of section 12 and 3 to 13 in case of section 13. For the paucity of time, I am not going into all the sections. We are not having the time to go into all the sections. But some important, I will just go through certain 2-3 aspects which are very important. I think one is in the case of transportation. The case of transportation, if the location of the supplier as well as the recipient is in India, then if it is given to the service is provided by a registered person, provided to a registered person, the location of the recipient registered person shall be the place of supply. If it is not a registered person, the recipient is not a registered person, then the place where the goods are transferred, that will be the place of supply. The place where the goods are transferred to the transporter, handed over to the transporter, that is the place of supply. And there can be a situation where both the supplier as well as the recipient are in India, but the destination of the goods is outside India. It's possible. In that situation, again, the place of supply shall be the destination of the goods. The same provision is up there in the case where under section 13, where one of them is outside India. In that case also, the place of supply of transportation service shall be the destination of the goods. And another aspect I would like to cover is regarding the intermediary service. In the case of intermediary service, in the case of banking service, the place of supply shall be the location of the supplier. The place of supply shall be the location of the supplier. If the intermediary is situated in India, if the service recipient is outside India, still the place of supply shall be in India. And sometimes the CGST, SGST bill, or sometimes IGST bill shall be raised. Then what is the difference between the place of supply in India and outside India? Assume that in this situation, if the place of supply is outside India, then also it is taxable in India, but at that situation it can never be CGST, SGST bill. The location, place of supply is outside India, then it can never be CGST, SGST bill, shall always be IGST bill. And the income will not accumulate to any state if that is an IGST, the place of supply outside India. Okay, and I will conclude this by just one more point, that assume a situation where an IGST bill is raised by A in Kochi to the B in Delhi, but the place of supply is in Chennai. I raise an invoice, A in Kochi raise an invoice to B in Delhi, but the place of supply is in Chennai, in Tamil Nadu. My question is whether B can claim input tax credit. I raise an IGST bill to Delhi where the place of supply is in Tamil Nadu. Whether the person in Delhi, the input tax credit, whether it will be available to him or not. It is not available to him. Even though I raise an IGST bill, since the place of supply is in Tamil Nadu, the person in Delhi is not entitled to take input tax credit on that, because when I raise the bill, its place of supply is in Chennai, and place of supply means the state to which the income will go. The state to which the income will go. The income will go to Tamil Nadu and not to Delhi. And the system is the system is structured in such a way that when I file my GSTR1 return, I will show this return with the place of supply Tamil Nadu, and the amount will not be transferred to Delhi. Government will not transfer the amount into Delhi, but the amount will go to Tamil Nadu since the place of supply is in Tamil Nadu. So this is one not I like to.
Thank you, Sergio. Now, due to extreme paucity of time, straight away we go to Rajshekaran on the refund. Rajshekaran?
Yeah.
And the most important aspects of it, because we have got hardly 15 minutes.
Okay. It's like a 2020. Not even a 2020. Yeah. 100 dollars. Yeah.
And we have few questions also and raised hands. So I don't know whether. Yeah, tell me. Go ahead.
Yeah, basically, refund is one of the very few areas where we can add value to the client, and the client will not really mind to pay us for our services also. It is something which they are believing when they are seeing that the fund that they are getting from the government is actually coming. So when we do that service, it's a kind of recognition. But while doing that, we have to be really mindful of the different kinds of situations where we are entitled to refunds. Broadly, if you look at it, refund arises when you have paid wrong tax under the wrong head, then you want to get the money back from the tax head which you paid the tax wrongly. Then you have exported the goods after paying the tax. You can get the refund. You have exported the good without payment of tax, but your input tax is getting liquidated. You can claim the refund of tax. You have an inverted duty structure, which means the tax on your outward supplies are the rate of tax is less than the rates of your input supplies. Then you have a scenario of your inputs getting accumulated. In those scenario, you are entitled to go for refund. Then deemed export scenario, when your sales is deemed as an export, or when you are receiving a deemed export, in both the situations, as a recipient or as well as a supplier, depending upon the situation, if the other party is not claiming the refund, you can claim for the refund, meaning thereby that as a supplier of deemed export, you can go for refund if the recipient gives you the declaration that he has not taken the input tax credit or he will not go for the refund. Then as a supplier, you can take the refund. Or in the same case of deemed export, the recipient can go for the refund if the supplier gives a declarations like that he will not go for the refund of the tax paid on his deemed export. So these are the broad areas where refunds will be accruing. And then specifically very practical situations that is happening nowadays in Kerala is with respect to the builders, where initially they had on the basis of time of supply, when they received the advance, they paid the taxes. And after a point of time, the customers withdrew from the contract, cancelled the contract, and took the entire money back. So since the builders had already paid the tax initially, now the situation when the customer cancels the contract is such that they have to go for a refund of the tax paid in respect of the contract. Most of the cases, unless you have corresponding high amount of outward tax supplies in the ensuing months to adjust that amount given as refund against. Otherwise, this is also an emerging area of tax refunds. These are the broad areas of refund. The one very important thing to remind or remember here is the fact that there is a time frame to apply for refund, which is called the relevant date, which is broadly, it is 2 years from the relevant date. And if you look at section 89 explanation 1, relevant date is has been provided in the case of 13, 14 scenario. And we have to be really mindful about the definition of refund. The important point is, once you miss out filing your refund application in this refund time frame, then your claim for refund will elapse, which is highlighted by a previous text law in Mahindra relating to the erstwhile regime. But the principles of that is that will be still relevant in the context of GST also. So, understanding the relevant time for applying for a refund for a particular situation and claiming the filing the refund application in the time frame is an essential aspect which has to be considered. Then the other thing is government has the government has evolved or kind of refined the process relating to refund over the period of 2-3 years. Initially, you take for example the export of goods. Initially, we had to claim the refund through a separate application, but now they have, as a part of ease of doing business or whatever, the process has been significantly streamlined. In the case of direct exports, export of goods, where you have paid the taxes, you have exported the goods by paying the taxes. The system of refund is in such a way that your shipping bill, based on the shipping bill, the customs will record the export, and once you file the 3B and GSTR1 relating to that export, automatically the tax on export which you had earlier filed, that will automatically get credited to your bank account without you having to separately apply for it. That is one refined or the improvised procedure that is applicable or that is available in respect of export of goods. In the case of other refunds, the provisions are, the governing rules are generally contained in section 80, rule 89, which again is a self-contained code. Now the system has improved a lot where your claim for refund obviously will, unless there is any patent mistakes or patent deficiencies in the applications or in the circumstances of the transaction, you will get the refund at least within 60 days. This has evolved a lot. So from the initial periods where there were a lot of confusion, again initially you had to go to 2 authorities for your refunds. You had to approach the CGST authorities, you had to approach the SGST authorities as well. Now there is a complete uniformity or there is an integration in the process where you have to only apply to your jurisdictional officer. If it is a central CGST officer who is your jurisdictional officer, he will also ensure that the refund from the SGST department is routed through him only, thereby meaning that you will get the refund only from one source. So you don't have to run to 2 authorities for getting the refund. Of course, that is also an improvised, improved upon procedure from the initial stages. Then when you go to the nitty-gritties, it will take a little bit more time. I think the paucity of time does not demand that. If there is any specific questions regarding that, we will be able to answer. But before that, one latest development or an emerging area of litigation relating to refund is with respect to the inverted duty structure. Inverted duty structure, as I mentioned previously, is a situation where you have a large unusable accumulated tax credits as a result of the your rate of tax on outward supplies being lesser than the rate of taxes on your inward supplies. Section 54(3) of the Act provides the mechanism for refund in this kind of in the situation of inverted duty structure. And the specific rule which deals with this specific section 54(3) is Rule 89. When you look at Rule 89, in the case of inverted duty structure, the government had brought about a change where they restricted the refund of duty only with respect to the input tax credit relating to the goods. Meaning thereby that if you have a credit, accumulated credit arising from input tax services or credit from capital goods, the rule says you cannot claim those credits as refund. They will simply lapse. You can only claim the credit in respect to the goods under the inverted duty structure refund mechanism. But of late, Gujarat High Court had delivered a very significant verdict in VKC Foodstuffs India Private Limited, which is a decision that was delivered some 1 month back, hardly 1 month back, where they had touched upon the very fabric of the GST. They had gone into the empowered committee's observations, the statements of the legislature or the GST council when the law was introduced. The general principle being the concept of seamless credit, meaning thereby that the tax has to be borne only by the ultimate consumer of the service or goods. So they have touched upon those very fundamental principles as well as looked into the wordings of section 54(3). It says that refund of input tax credit shall be entitled to a person when there is a condition of inverted duty structure. And it went on to hold that the rule restricting the refund of credit only to goods and denying the refund of input tax with respect to the services and capital goods is ultra-wise section 54(3). So this is a very significant development in the realm of refund, inverted duty structure. I think the logical reasoning or the justification given in the order is also very clearly elaborated. I think this can probably become the law relating to 54(3) in future. This is one development that has happened of late, which probably has given us the power to go for refund in the case of inverted duty structure, as well for the input tax credit on services and capital goods. So this is the broad aspect which I wanted to touch upon. Is there any problem?
No, I just had a video issue.
Yeah. Now it is okay. Yeah.
No, I had a video issue. So.
Yeah. Okay. Very briefly, just upon the aspect. Very briefly.
Chairman, is there?
Yes.
Yes.
Questions? Just kept 10 minutes for that.
Samansar kandinna Q&A box ulladha?
No, sir. Just seeing right now only.
Right. I think 1 minute eduthu noki kaniya
Okay.
Will the discount, incentive, volume discount, breakages and shortages received from supplier, is it liable for GST by the recipient?
Okay. That is one regarding discount, no? Okay. Discount 15(3), section 15(3). That is, there are two types of discount. Surjay sir and Rashid, you are also joining now.
Yeah.
Okay.
Yeah.
So I will just start up. That is, discount is covered under 15(3). Discounts are two types. One is showing there in the invoice. This is only with regard to terminal discount, incentive or volume discount, which is given at the end of the period. So there are 2-3 conditions for that, availing that input tax credit rather without paying the tax, the recipient can avail that input tax credit subject to 3 conditions. One is that the supplier should have issued, there should be an agreement even before starting of the transactions. Second, supplier should issue an credit note showing the details of the invoices covered. Third one, the recipient should have reversed the input tax credit availed against the original invoice. So this is the primarily the legal requirement of availing an input tax credit through the credit notes or the whatever way we call it as incentive or volume discount, etc. If the supplier is also availing the benefit of reduction in tax through the credit note, that is the point. Otherwise, if it is a financial credit note, then no question of any reduction of tax, etc. Then there is no question of any payment. Only thing, ensure that this is not to be treated as a amount, that is a part of a sales consideration which is in a disguised form. Disguised form in the sense, it is not to be treated as an amount which is provided to the recipient by the supplier as a compensation for any business auxiliary services. Then it will be viewed differently. So generally, discount can be transferred subject to the 3 conditions. Anything more, sir?
Sharon?
Yeah, I mean, basically, discount, this is also a controversial area. Department compounded the problem by issuing 1 or 2 circulars, again, which complicated the situation. But the simple aspect is discount, you have to see the things in the entire perspective. If the original supplier issues a discount, it is actually not a supply for him. It's actually a revision in the price that the buyer is supposed to pay to him. And if it is issued by way of a credit note, where he reverses the credit and where he also reduces the tax, and as a result of which the recipient also reduces his input tax liability, then only the question of this taxation or reversal comes. Otherwise, if it is a simple financial credit note, there is no issue of either paying the refund or reversing refund by the supplier or reversing the refund by the recipient. That is my view.
Okay. Now, second question by Vivek Bhatt is providing personal guarantee a supply. This is, I think, we already covered that. Isn't it, Soman?
Guarantee, personal guarantee. The question is providing personal guarantee a supply at all?
Yeah.
So supply at all. That means Sergio sir has in between said that the relationship between the director and the company is that of a related party transaction. If it is a related party transaction, Schedule 1 will apply. Okay. So it shall be considered as a supply without a consideration, even if it is without a consideration. That is what it is mentioned in the initial. I think Sergio, you can add some more then. Anyway, it is an item coming under reverse charge. Right?
Yeah. And further, one more part is there, whether if the personal guarantee is given by a relative of the director, that part is also there, I think. So in that situation, if the relative is not a relative of a director, normally will not come under the definition of the related persons between the company and the relative of the director is normally not a related person. If they are not a related persons, then the personal guarantee given and no consideration is there. Provided no consideration is there, then there is no supply. The Schedule 1 activity, Schedule 1 will come to play only if the both are related persons. The relative director may not be normally not be a related person.
So that is clear now.
Correct.
And Frigamar has asked question. An IT company gave some laptop as compliment to customers.
Okay.
Whether they can avail the ITC on laptops, since the same treated as free supply. Whether the answer will be different in case a laptop is given with IT bill and taking the same as composite supply.
Okay, that is first part we will try to, that is an IT company gives some laptop as compliment to customers. That is only at the time when a sale takes place, one more laptop is given. Probably that may be the scenario. Take 1, take 2, bill 1. Is it not?
No. Here it is it's compliments because the IT company doesn't mean that it is. Is it a company dealing with hardware items? Or
Anyway, we can
clear?
for the time being we can say that they have purchased the laptop. IT company has purchased the laptop only for the purpose of giving free gift to the customers. Okay. So Wipro, suppose Wipro, their customers to their customers they are giving one laptop each. Say that a company. See, take that example. If the Wipro, if the IT company has taken input tax credit on the laptop when it is purchased, Section 17(5)(h), ITC, goods lost, stolen, destroyed, disposed of, or given as free gift or sample. 15, that is 17(5)(h). 17(5)(h) will get attracted. IT company, if input tax credit has only been taken on the laptop given free, then it is a blocked item. Otherwise, if it's not tax is taken, ITC is not taken, you can give anything because it is a free gift.
ITC is not taken. Okay.
ITC is not taken, that is okay. And second part is whether the answer will be different in case the laptop is given with IT bill and taking the same as a composite supply. IT bill and taking the same as a composite supply, what is that? Okay, some service would have been given and then a laptop is also given along with the service bill.
Yeah, this is a software company. So, along with the software supply.
Okay, software supply service bill is there. Along with that, they are adding one more laptop as part of the composite supply. That is not a composite supply at all because it is not conjoined or it is not jointly together. It's not like a supply. Is it not, sir?
Naturally bundled.
Not a naturally bundled.
Natural bundling.
Should we go faster because
yes.
time limit is 1:30 as prescribed by the chairman.
Okay. That means okay, right? Then
Section 52 triggers only when payment is collected by ECO. So WhatsApp facility should not trigger to my view. That's a view.
Yes.
Is there any clarification?
We also agree with that, no? Yeah.
It's a guarantee. Whether a registered person is able to pay GST on unregistered purchase now?
Case of guarantee given by directors.
Where it is?
Stein Joseph.
Surja has already answered that, no?
Yeah, he has already answered that.
And the last part, how it will be valued. Value shall be determined. We will know how to go to the valuation route.
Yeah.
I'll just like to add one or 2 points.
Yes.
The valuation rules. Section 15 says when the transaction is between the related parties, you cannot adopt the transaction value. You have to go to valuation rules.
Yes.
The specific provision which deals with the valuation of related party transaction is Rule 28. You have to first go there. And with respect to this transaction, when you go to Rule 28, it says the value adopt if the recipient company is entitled to full credit with respect to this particular GST, which you will pay based on the valuation you are at. If that company is entitled to the full credit, whatever value you adopt, that will be taken as the value. You can even, for the personal guarantee case, you have given personal guarantee for 1,000 crore loan, but if the company which is paying tax on reverse charge basis is entitled to full credit in respect of the tax component on this RCM invoice, then you can even raise an RCM invoice for Rupee 1. The rule empowers you to take that position.
Okay, there is no revenue loss.
Very important. Practically, very important aspect.
Yes.
Anyway, let me hand over the proceedings to Chairman. Chairman is in mute mode.
Beyond recent it's covered.
There are couple of more questions.
Yes. Your view on recent Gujarat High Court decision?
That I have already answered, sir. That is, it was a case. Yeah, I will just explain that also. It was a case of intermediary service providing. So, place of supply in the case of intermediary, Surja sir has already said that intermediary's case, place of supply is the location of the supply, is it not? So, location where the input intermediary is located. The intermediate located, that is 13.8, right? So court has also taken that view and said that it is well within the 13.8 and read with the intermediary definition in IGST Act. So their view is it is a taxable item in the hands of the intermediary, though the supply is outside. It cannot be taken as an export of services. That was their view. Okay. Then anything more? Nowadays, notices are coming from department asking to give explanations on variations between 2A and ITC availed.
That's
Okay.
already.
No, we will just have 1 second on that. But on perusal of the details, we understand that there is a difference between monthly 2A downloaded and the auto-populated figure in GSTR 9. GSTR 9, auto-populated figure, and how to answer that. So GSTR 9 figure, there is pertinent, there is inevitable that there are some differences because the GSTR 1 would not have been filed properly. Even if it is submitted stage, it is not filed. Suppose that can also cause one of the reasons. As far as the supplier is concerned, he says that GSTR 1 is applied. The sub is submitted, but it don't have been filed. Submitted and filed are different. Only when it is filed, it will get pop up in GSTR 2A. So that difference has to be identified. GSTR 9, table 8, as well as GS 2A are having some differences. Identify and correct, reconcile it. That is the only way out. If we are strictly following the provisions. Okay. Otherwise, we can take it for granted the way we have discussed in the
most of the questions
scenario.
are answered.
Yes, answered.
In the chatting by question answer by Soman. And I think Chairman, you can take over.
Yes.
I think it was an excellent session. I feel that. I think totally when you three come together, I think it will make the total difference in the situation. I think. I hope those who attended here today, I told you around 110, more than 110 registration was there, and 60 is actually attendance. I think there's a basic reason is that in the morning session.
Yeah.
I think even if it was the afternoon, I think it would make difference to me. I feel that. Anyway, it was a wonderful session. You did very well, both of you. I need not say that you did all of you three perform well. I think it's wherever you are putting. I think here also when we are going outside also. I think the feedback which we receive from your support or your classes is very fantastic. I think. Really a credit to ICAI Ernakulam branch, no doubt. I don't know how to thank you for. But anyway, we will get more chance. I think after this, I think after the tax change, we'll be getting more chance on even on annual account. I mean annual filing and all. I think we can have one detailed panel discussion. We will arrange again. So for the official vote of thanks, I request Jos. Please.
Thank you, Chairman. Thank you very much, panelist and moderator, for that wonderful debate. Discussion on goods and services tax, especially to the levy, registration, input tax credit, refund assessment, and place of supply. So all the moderators, all are very familiar. Our own members, CA Rajashekaran V, CA Sergio VJ, and CA Soman K NL. So thank you very much for spending these 3 hours on discussing on these aspects. And thanks to moderator also, especially for keeping the time, and within 1:30 moderators will be on to stop. So even we delayed starting with 5 or 10 minutes, but you could very well manage the timing. And thank you very much, our past chairman CA Bal Gopal Ramohan, for that wonderful moderation also. And thank you all the managing committee members who is attending here, CA Salim and CA Ranjit. And thank you all the participants for your, you can see a lot of questions in question answer chat box. So thank you for your the active participation in this session. There are few announcements.